Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti. On behalf of OTC Markets, we're very pleased you joined us for the Clean Energy Metals Conference. Our first presentation is from Jindalee Lithium. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Ian Roger. He's the Chief Executive Officer of Jindalee Lithium, which trades on the OTCQX Best Market under the symbol JNDAF and on the ASX under the symbol JLL. Welcome back, Ian.
Thanks, John. Thanks for having me, and welcome, ladies and gentlemen. I'm really excited to walk you through the Jindalee story today. Look, just a normal disclaimer there. The only thing I'd really draw your attention to is that the currency in the presentation is Australian dollars unless denoted otherwise, and for normal forward-looking statements, etc. For those that aren't familiar with the Jindalee story, it's really an incredible one. The McDermott project was pegged by the company in 2018 on the eve of COVID, even better before one of our major competitors dropped the ground and hadn't drilled a hole. We had exploration success in our first hole, managed to drill throughout COVID and build up what is now the US's largest lithium deposit. It's a sedimentary deposit. It's similar in size and scale to our near neighbours in Lithium Americas with their Thacker Pass project, which is currently under construction. For reference, they're a US $600 million company. The major shareholder is General Motors, and they count the US government as one of their big supporters with a conditional commitment for a multi-billion-dollar loan to build that project. We're in a very strategic location, developing on the footstep of the EV supply chain build out. We drive past Tesla factory on the way to site from Reno, and our project will produce a lithium carbonate, especially lithium chemical. That's a really key differentiator and an important point to make. That chemical can be used directly in the US domestic onshore EV or battery supply chain. It's not a dig and ship to China to be processed elsewhere. It's an end product that can be used in that industrial supply chain. As a result of the strategic nature of the deposit, we've had a lot of inbound interest. We've got an MOU with POSCO Holdings. They're a South Korean large industrial company and player in the battery value chain. But even more than that, they've got a big presence in North America. They're a partner and supplier to General Motors with regard to their battery materials. And in terms of the market, our timing is good. Yes, there's some softness in the market, but really there'll be a deficit in the end of the decade, and our project is poised to perfectly to leverage that. As a domestic US project, where there's a wide range of incentives that we're eligible for, which have the potential to really enhance equity returns. Of immediate interest is non-dilutive grant funding, of which we have sort of a couple of applications afoot, which I'll talk to later. But really, the end game is the cheap, long tenor US government debt, and we're, as a domestic US project, eligible for that. In terms of 2024, it's been a huge year for us. We've completed some real major technical milestones. We're on the cusp of producing our pre-feasibility study for McDermott, as well as some potential government funding later in the year. And it's a really interesting time to follow the company. Look a bit more about Jindalee. We're quite unique for a junior mining company. We've been around for 20 odd years, but we've only and generated a lot of value through the project generator model. As a result, we've only had to raise capital after 17 years of being a listed company, which is really rare. And that's due to the fact that we've self-funded through that time through delivering value for our shareholders. As a result, we've got a very limited number of shares on offer, circa 70 million. We've got a very tight capital structure of loyal and supportive shareholders. The top 20 hold circa 70%. And Lindsay Dudfield, our major shareholder at the top of that list down there, is a founder, still an executive director, never sold a share and continues to invest in the company throughout the cycle. And myself and the board of directors have all sort of deployed capital and got real skin in the game. So we're a well aligned and see a lot of value in the company. Our strategy was always to find the company making asset, and clearly we believe we've done that in McDermott. I'd encourage listeners to have a look at the research report in the corner of this slide. But really, we've been in a transition from explorer to developer, building out the team, and I'll touch on that on the next slide. Excuse me. We've got a really high caliber board and management team, particularly given the relative size of the company, which really speaks to the value that we see in the asset. Wayne and I joined this year as chair and CEO respectively. Wayne comes with a deep breadth of experience in financing large projects. He's currently the chair of Pantura, which is a significant gold producer in Western Australia. He's also previously Deutsche Bank's senior representation in Western Australia. Myself, I'm a mining engineer by background, cut my teeth at Rio Tinto across two large-scale greenfield mine developments before holding senior investment and merchant banking roles in the natural resources space in London and in Sydney. Most recently, I was project director at Oz Minerals, a circa $10 billion base metals producer before it was taken over, and where I led a bunch of projects, but most relevant in the downstream nickel space, looking at technical studies, but also commercial partnerships to help fund projects. I've touched on Lindsay. He's got a track record really around exploration, and he brings a lot of experience in that regard. Brett Marsh, our US VP, he's got a breadth of experience. He's been a lot of the key to our success on the ground in the US with engaging with local stakeholders, but running operations also. And really, the rest of the board brings a real complementary skill set. Paul's one of the rare breed with lithium operation experience. He's previously CEO of Mineral Resources Lithium business, which of course is a significant major lithium producer. He's also CEO of Core Lithium. Darren's got a wealth of lithium experience. He's a corporate lawyer, but had been around the lithium industry for a long time. On this slide, I really just wanted to set the scene before I got into the bones of our project, and really set the scene in terms of benchmarking. On the left, you can see that McDermott is easily the largest lithium sedimentary deposit at a similar scale to our peers, similar grade, I should say, to our peers. On the right, really just highlights how cheap we are relative to that same peer group. Lithium Americas and Ioneer are clearly more advanced projects that trade at higher multiples, but those projects in the middle of the curve there trade at, they've got a differing asset quality, similar stage, but trade at multiples well higher than we are. So we really see that at these prices, Jindalee offers great value and leverage to a recovering lithium market, particularly as we move through some of these real technical milestones and de-risk the project. So I'd encourage investors to look at the company through that lens. Sorry, bear with me here, just technical difficulties. Great. Perfect. Look, the next 6 to 12 months will be pivotal for Jindalee, with a number of near-term catalysts in the pipeline, and really wanted to talk to a bit about our strategy on this slide. We've recently completed a $6 million capital raise, which will allow us to complete the McDermott PFS and with a number of value optimizations incorporated. And to date, there's been really limited parameters in the market to educate it on the potential production profile and cost position of this asset. So hence the importance of delivering this critical piece of work. We expect the PFS out later this year to really demonstrate, a large-scale competitive source of lithium chemicals over circa half a century, which not too many projects can do with having a mine life like that. Given the strategic nature of the asset, our strategy is really aimed at targeting US government support both in the short term but also the long term, as well as downstream partnerships. In terms of government support, we're well progressed with regards to a technical cooperation agreement with various US agencies and regional universities, which we hope to provide an update on in the coming months. But perhaps more materially, we're well advanced on 2 grant funding applications, one with the Department of Energy and one with the Department of Defence. There's a bit more meat on this later in the presentation, but the so what here is that this non-dilutive grant funding has the potential to materially co-fund us from where we are today through to a final investment decision in a couple of years, which really will help stretch the equity dollars and keep our capital structure right and preserve the upside for our shareholders. Looking ahead in terms of partnerships, like I mentioned, we've been actively working this year with POSCO, doing work in Korea and with them, and they're keen to sit down and see the results of the PFS later in the year when we've got them in hand. And really, our MOU with them is a collaboration agreement, and we'll sit down and discuss next steps after the respective work packages are complete. But we've also had a lot of other inbound interest from different groups, be them chemical companies, OEMs, commodity trading houses and the like. And really the key to unlocking that interest is the PFS. So we intend to run a process and more formally engage with those groups later in the year. Our partnership model is really framed about bringing the right complementary skill sets in. This is going to be a large project producing lithium chemicals, so it needs to be plugged into the market. And those groups that can bring the complementary skill set and balance sheet strength will help accelerate project development and therefore value creation. So we're really excited about that later in the year. As I touched on earlier, McDermott is ideally situated to service the build out of the US supply chain. From the map, you can see the number of gigafactories that are operating or announced in the US, which will drive a large increase in the lithium carbonate demand within the US. And even if this is slower than anticipated, just the order of magnitude I really wanted to sort of elaborate on. We're expected by the end of the decade to have demand in the order of hundreds of kilotons, but the elephant in the room is where's that supply going to come from? Currently, there's one mine in the US that produces lithium that's in the order of say 5 kilotons per annum. Hundreds versus 5, so there's a large gap to be met. It's going to need projects like McDermott to be developed to meet that shortfall over time. In terms of our project, our claims straddle Oregon and Nevada in the western United States. Our current resource is currently 100% in Oregon, and it's located on federal administrated land through the Bureau of Land Management. And that's really an important point to make because they're the lead permitting agency, and that's the same as a bunch of our more advanced peers that have successfully got through the permitting gates. People often ask us what it's like operating in Oregon, being a less familiar mining jurisdiction. We point to the fact that we were drilling within a couple of months of pegging the claims in 2018, and we've drilled almost every year since. It's located in a particularly poor section of the state and really the US more broadly. It previously prospered under mercury mining mid last century. In fact, there's a derelict mercury mine just adjacent to our claims in Oregon there. So the potential to drive value for a broader set of stakeholders is high. There's the green economy, the potential to really contribute to the energy transition, etc. But then the need for economic development in the region really has crosses over a lot of different stakeholders. So we've been pleased to have the support of a number of senior local politicians, particularly with regards to our US government agency funding applications, and we've enjoyed the support that we've had so far in Oregon. uh, the other point I really wanted to make on this slide is we've made a lot of progress in a relatively short period of time. We pegged it in 2018. In 2023, we announced the resource as the largest in the US and a significant size globally. But we then kicked off our PFS in the middle of last year. We appointed Fluor Corporation to lead that piece of work and the associated test work, and that was really a deliberate choice. Fluor are obviously a global engineering firm headquartered in the US, but more than that, they've got very deep experience in the lithium sedimentary space. They've worked with some of our more advanced peers. They're the lead engineer for Ioneer at Rollout Ridge. They've been involved with Lithium Americas at Thacker Pass, and they bring blue chip EPCM experience. And given our partnership focus, getting a group like this that can really help drive the project forward was seen as essential, and we've been really impressed by the work that they've delivered for us to date. I'll touch on the resource on the next slide. There we go. Clearly, the deposit is huge. We like to characterise this style of deposit as the copper porphyries of the lithium world. They're large, lower grade, generational assets. The deposits are sort of formed through sediments at the bottom of a previous caldera lake on the top of an old volcano. And there's a bit of a debate about secondary enrichment, but the sediments are sort of laid down like layers, sedimentary layers at the bottom of a shallow lake over time. And 4 of those sort of layers, or units, as we call them, have elevated lithium in them and have been the focus of our work to date. The material is really soft. For engineers listening, the bond index is in the single digits. It's free dig material. There's no drill and blasting. There's no grinding whatsoever. And it's outcrops. So the strip ratio, so the ratio of sort of waste tons to ore tons is very, very low. So a hard rock lithium deposit typically is in the order of sort of 4 to 7 waste tons per ton of ore. This deposit will be in the order of 1 and 1.5. So very, very low strip ratio, which bodes well for sort of low mining costs. And it also allows us to sort of target a higher grade strategy early in the mine life. And when I say early, I mean over multiple decades because of the size of the deposit. And we expect, as part of the PFS, we'll have a substantially higher head grade over the early decades of the mine life, exceeding sort of 2,000 parts per million. So that's a really positive piece of work that we're looking to incorporate in the PFS. And look, there's also plenty of scope to expand this deposit. It's open in a number of different directions, but really, we've already delineated, it's such a huge resource. It's the focus now is about better understanding what we've got and demonstrating that it's the commercials of developing it. In terms of our processing flow sheet, we've been able to leverage the work done by Lithium Americas at Thacker Pass, being a similar deposit and the most advanced in the US, and our flow sheet is almost identical to theirs. We often, though, get compared to spodumene developers, spodumene hard rock developers, be it in Australia or Canada. And the important thing to highlight is that our flow sheet, again, produces the lithium carbonate, which is, like I said, a high-value lithium chemical. And with the Chinese dominating the lithium chemical market, they refine circa 65 to 70%. The uniqueness of this project to be able to deliver lithium chemicals in the US is really key to its attractiveness, and the same goes for our neighbours in Lithium Americas who are looking to do a similar thing and much more advanced. A like-for-like comparison, if you're comparing a sort of a hard rock to a deposit to this, is really it's a mine plus a concentrator plus a conversion facility. So really, this project is sort of a one-stop shop that has a mine and the chemical plant in one. From a processing point of view, there's really 2 key steps. There's the beneficiation stage, which is really washing the material that comes out of the mine, and then screening out the coarse sand, which is the gangue, and keeping the clay fragment, which has the lithium. And through that process, we reject sort of 25% of the mass, but keep 90-something% of the lithium, and you upgrade the feed into the leach circuit, which is the bottom box there. the leach circuit to atmospheric leach, the lithium and some other metals come into solution, and then there's really a couple of steps to clean that up into a battery grade lithium carbonate. The real key point to make, it does look similar on the back end to the, say the spodumene route, but really there's no fine grinding, there's no flotation, there's no calcining. So really, in a lot of respects, it's a more simple and low cost process, and it's all proven units of operation. I'd encourage listeners. There's notes on this page that sort of elaborate on where these units are used elsewhere in industry. So it's all very standard pieces of kit. And I think probably the most key point to draw out on this slide is that we've now fully validated that flow sheet. We've tested it. We've tested all units of operations. A month ago, we produced battery grade lithium carbonate out of Hazen Research in their laboratory in Colorado, which was it's hard to hard to overstate how important that was from a technical point of view. We've now validated all the units of operation, at least on a bench scale, and that's and the results have really surprised to the upside. We've got really high recoveries in both parts of the process, and that really provides a strong foundation for our PFS due out later this year. Look, in terms of the lithium market, the long-term fundamentals are sort of rock solid. There will be material supply deficit in the short term, but clearly there's a lot of short-term softness in the market at the moment, and that's really been a function of the high prices we've seen in 2022, which has brought a lot more supply into the market, and we're working through that. And obviously inventories were built up as well, which has compounded those issues. But if we look at the demand side, I think the mainstream media has sort of conflated that with demand destruction, which isn't quite right. Lithium market is growing at sort of circa 20 to 30% this year, so it's still chugging along just fine. EV growth is particularly strong in China and the rest of the world, excluding North America. Energy storage is really coming off a low base, but growing very, very strongly and exceeding a lot of analysts' expectations. And then from a US point of view, what's the positive signs if you look at the OEMs is that they're all gearing up to put out lower EV models over the next couple of years, and they're really committed to that. We've seen Jim Farley from Ford come out in the last couple of months and really underline that if they can't get EVs to work, well, then there's a question mark on whether they can operate into the future. So there's really a commitment there, and that'll translate into double-digit growth for lithium demand globally over the next decade at least. So demand pictures, are fine. But then if we look on the supply side, yes, we saw some stuff come into the market, but particularly in the Western world, we're starting to see a supply response as the current spot price is well below the incentive price, and projects are continually pushing out. We've seen Arcadium, a large lithium producer, just this month announce, a couple of their major projects are either on ice or getting pushed out, and there's a bunch of other examples. But as these projects timing are pushed out, that drops supply out of the system in future years and really brings forward that deficit as demand catches up. And based on various different analysts, there will be a deficit in the back end of the decade, and so we're really poised nicely to capture that, and it bodes well for us and our project timeline. As mentioned earlier, Jindalee has applied for two key US government funding applications, one with the Department of Defense, one with the Department of Energy. Both are through various stages of review now. They were submitted over 6 months ago. The Department of Defense one is perhaps the one we're most excited about. That has the potential to fund an accelerated feasibility study and, associated test work, including a drill program and metallurgical test work, etc. From completion of PFS through to a FID decision in a couple of years' time, and it's part of a co-funding arrangement, so matched or similar type structure. So that really has the the potential to really stretch our equity dollars in that really key pre-development phase. In terms of the Department of Energy one, it's a much larger um, grant application, order of magnitude larger, and is really focused on the potential to build a processing facility at McDermott, be it a demonstration facility or the actual plant itself. The key point to highlight, though, is that they're not mutually exclusive. We could be successful in one or both or none. So really, we'll know more later in this year based on our current guidance. So we're excited to see where they get to. Just to recap, over the past 12 months, we've made significant progress in de-risking the project and installing the team that can really deliver value on the project. The next 6 to 12 months really promise a lot of significant value catalysts, including the McDermott PFS and progress around that government funding, as I touched on. Jindalee is really trading at rock bottom levels by any metric, and at this valuation, we believe it presents a asymmetric risk profile with substantial upside. We'd encourage investors to take a closer look at what we believe is an emerging top tier generational asset. So with that, I'd like to thank everyone and take some questions. I'll start at the top here. Does the McDermott mineralisation host similar metallurgical properties to the Thacker Pass deposit? Yes, it does. We're located in the same caldera, same style deposit. There is some subtle differences. There's a slightly higher grade, and then our project, based on our results to date, seem to achieve slightly better metallurgical recoveries, but very similar properties. The McDermott lithium project is already the largest lithium resource in the US. Is Jindalee's focus on continuing to grow the resource or advancing it to production? Put simply, it's on advancing the project. We plan to do a lot more drilling, but that by and large will be infill drilling, trying to target the higher grade section of the ore body and improving our understanding around that. Can you explain the nature in terms of Mercer Street investment? Mercer Street are a US institutional investor. They have recently invested a significant amount of capital into Jindalee. It was structured through an equity investment and then also a convertible note. The equity also was straight equity, and it was done alongside an entitlement offer to existing shareholders that was which was taken up nicely. And the convertible really, given the current market conditions, the thought process around that was trying to limit the dilution to existing shareholders, as opposed to doing a more traditional dilutive placement. Is Jindalee listed in the US, and will it be listed in the US, and how will it affect dilution? So simply, yes, we're on the OTCQX at this point in time. The ASX is our primary listing, but we trade through the OTC. And at this stage, there's no plan for a more fulsome listing in the US. Certainly, it's on our list. Certainly, as markets improve and we progress the project, and ideally become a larger company. So certainly, we're looking at options around that over the next couple of years. And I answered that. Yeah, our team. Sorry, we are a pure play US company, so most of our employees and team are Americans in the US. Look, I'm running up against time here, but if I answer one more question, do you feel EVs are still important in the US as they were a few years ago? I think yes. I think obviously there's been some negative headwinds in the press, but I think if you look at the commentary coming out of the groups that have a vested interest in building the the cars of the future, they're all doubling down. So I think that tells you all you need to know. Thank you, everyone, for your questions.